Hello everyone, welcome back. This is VK from the Black Box. So on the previous video I have showed you the 3 months time frame. Using the black box we have profited a lot, as you can see from this one. The black box is everywhere, so we are selecting where we have the criteria fulfilled, where the criteria has been fulfilled, right? So I have showed you on the 3 months on euro dollar. You can watch it, a video on my channel, right? So it is euro dollar on 3 months. It says that is the title, right? So as you can see, there was a lot of setups. As you can see here, buy and then here sell, and here we were a little buy and then sell, right? Here we had a sell right there, then buy, then sell, and here we are in 2024 February, right? March, I mean February, in February, right? So we are right here, so still we are in consolidation, so we will expect something to happen. So this is a monthly time frame. As you can see, euro dollar on the monthly time frame, and we will be catching our trade using our black box. So I will show you everything. I have showed you on Bitcoin from the 3 months, I mean from the monthly to the 4-hour time frame, so you can watch that thing and you will learn a lot. You will learn a lot. The black box is everywhere and is giving a lot of profits. It is giving a lot of profits, and you cannot deny that. You cannot deny that. It is crazy. It is crazy. So as you can see, let's start from here, right? So this is euro dollar on the monthly time frame. Each candle is a month's worth of trading. Do you see any consolidation? 3 candles in a row. We can see here there is a 3 candle formation around here. Where? Right, 1, 2, 3, 4 right there, right? So you cover this thing, the whole thing, right? So what happened? This candle broke the upside, so you buy right there. You buy and then you wait for your TP to be hit, right? So in this case you measure your TP is up there. This candles, I mean this boxes hit right there, okay? The TP is never hit, so you never touch that thing. So what happened is it formed a wick, and as always the wick will be filled. It will be filled by the next candle. So you can see the next candle smashed it. You trail your stop up there, right? You trail your stop up there. When this thing moves a lot, you trail it halfway. When this thing moves a lot, you trail it halfway, right there, halfway. When this thing moves a lot, you trail. So that's how you do it, right? So you would get a lot of profits, and your risk to reward will be very high. It will be very high. So this would have been a great trade. It, as you can see, it went more than TP3, right? TP4 was hit right there, and what it did, what the price did is crazy. It consolidated and even pulled back. So you would get out right at TP3 most of the time, and it would sometimes go to TP4, so you would trail your stops, okay? Halfway out right there at your TP, halfway out, half profit will be out right there. Remember this, okay? Half of your profit will be out in that TP1, and you let the other half run. By doing what? By trailing your stop. Not too close, don't do that. All you gotta do is trail it a little bit. When this thing moves up, trail it a little bit. When this thing moves up, trail it a little bit, right? So as you know, markets move in a pullback, an impulse, and a pullback, an impulse, and pullback, then an impulse, right? This is how they move, right? If you trail it too close, then this pullback would get you out. After getting you out, it would go double. It would double that pip. So you would be very annoyed by that. So you gotta trail your stops wisely, okay? Trail it not too close. You are already in profit. 50% is out. So what do you want more than that? What do you want more than that? So uh, that profit could run more if you do not trail it too close. Okay, it has to be wide. There has to be a room to breathe for the market to pull back and continue its movement. Okay, so that's what I am trying to say. So in this case, if you had trailed it around here, then the market went up, really up, then you trail it a little close, and then finally the market came back, right? So you'd get out there automatically in profit. This whole profit is yours. If you measure this thing, this is huge right there. This is no joke. This is huge, people right there. That is to where you get out, that is 1,500 pips. 1,500 pips. It's crazy. It's crazy. It was 1, 2, 3, 4, 5, 6, 7 months of trading. Almost a year. It's crazy. It's crazy. But what I am trying to show you is I am not trying to make you trade on the lower time frame. I mean on the higher time frame, like the monthly. I am trying to, let me pause this thing. Okay, all right, let's continue our backtesting, right? So what do you have here? We have nothing. 1, 2, and 3. Then now we have something right here. So in this case, what you're gonna do is you connect it like this, as you can see. And then what did it do the market? If you had caught this thing on the for the candle, then you would enter a buy right there. And the market retested your stop loss down here, no one cares. So as you can see, the market pulled again up and went to your direction, right? So what you're gonna do is, if you had entered after these 4 candles have been formed, then you'd enter a buy right here when this thing breaks, right? So you enter a buy, your TP is exactly this box's height right there. You put it up there. So you can see the second candle will get you out of the trade, right? You will be out of the trade right there, 50% out. Let the other 50% run to the other TPs, right? So beautiful trade, right? Next, what happened? We got 1, we got 2, we got the third one, traded up and then went down. So this is valid. Why is this thing traded down? I mean traded up, then down. So you can see this. This thing traded down. If this thing didn't trade up and didn't form a wick up there, and if it fallen down to the ground without trading up, then we would consider this as a 2. I already told you that this thing, if this trades above the 50%, above all of them, above this consolidation, this box, then we would assume this as a 3 candles formation. So you would enter a sell right there or right there. So as you can see right there, you sell, TP hit, boom. So record it in your notebooks, right? So that's why I tell you to have a notebook. Notebook is great when you are watching these kinds of videos, especially mine. There are a lot of things that a lot of pieces that you later time that you would combine them and make meaning out of them, right? So you gotta jot down some key parts, some key ideas that I am talking. So as you can see, this thing traded up above 50%. That is a valid consolidation, a valid black box right there. So you enter a sell right there, boom. TP3, the same thing, 50% out right there. Let the other 50% run, stop loss below your entry, so you are in profit right there. So the market finally traded down, your stop loss above there, then traded up and then traded down more. So that is another great trade right there. What do you see here? We see a consolidation. Why? 1, 2, 3, 4 right there. 3, 4, 4 of them right there. So you connect it like this. This is a consolidation right there. So you can see it. So what happened here is it broke to the downside, right? Broke the downside, you sell. You sell, your TP would be hit right there. Let the other 50% run, and your entry would be, your stop loss would be to your entry. Then as you can see below your entry, so this thing came back and got you out of the trade right there. So that is beautiful trade. Not beautiful, but we are uh, making it great. The black box is great. Beautiful. It's beautiful. Right there, beautiful trade right there. Boom. TP hit. What do you see here? We got 1, 2, 3, 4, 5 right there. Right? You connect this thing like this. Right? These are equal, at least they are equal, so you connect them like this. They are equal. They are relatively equal. So that is the consolidation. They are equal up 0 to right there, right? You connect it like this. Let me delete this thing. What you got here? A break right there. Then what you got here? The second model. What is that? Break and retest right there. Boom. Went to your TP right there. Your TP hit. Boom. Let the other 50% run. Put stop loss up there. And then the market moved up again. Further and further. It never stopped. So, and we got another one here. Same thing. 3 consolidations right there are almost equal. So you connect them like this. Right there, buy, boom, your TP hit right there, then let the other 50% run, boom, and then this thing went up, right? Then we got another consolidation. Where is this? Right there. Connect the loss. Not up there because there is no equal thing right there. This is not equal. So this thing traded down, folded up, right? That is a valid 3 candles consolidation. Beautiful, beautiful. As you can see, it moved up. Then it supported and then moved up higher again. TP it right there, 50% out, 50% leave the 50% right there. Stop loss above your entry after this thing moved further higher, further higher. If it is trading close to your entry, do not trail your stop yet. Don't trail it. And as you can see, this thing moved up and up. Stop loss down here. Then this thing moved up. Stop loss up there. Then this thing could get you out of the trade, right? So beautiful right there. Then we got another 1, 2, and 3, 4. Right here, it was not a consolidation. This, and these 3 candles made it. Then finally, the whole thing is a consolidation right there. Okay. Equal parts. Equal candles right there up there. If you want, if you are conservative, you can put it down, but I suggest put it down here. Long wicks, do not connect long wicks. Even you can connect it like this one, right? And then you can buy this thing. You can buy this thing, and your stop loss above your entry, right? And then when this thing breaks the downside, that is a third model, then you sell it. You sell that thing. If your black box is if you too low, too tight, too narrow, then what you're gonna do is, if there are long wicks, what you're gonna do is you're gonna connect the bodies, not the wicks, right? So as you can see, buy, put your stop loss above your entry. As this thing moves up, then the thing smashed, you are in profit, no worries. And then this broke down, the third model right there, sell, and then this thing moved down, then your stop loss above there, then this thing broken down. Stop loss then out, right there, 50% out, TP hit, boom, right? Then what you're gonna do is leave the other 50% run. Then what happened here is, uh, it melted a lot, right? It melted a lot, this thing formed, smashed up, then melted your stop loss up there. This thing came down, smashed this the downside, then okay, then what happened here is you put your stop loss up there. After this thing moved down, then stop loss down there, boom, smash your stop loss down here, right here. Okay, then this thing would get you out of the trade, this candle or this candle, right? So beautiful trade right here. What do we have in? Nothing. We got nothing on the monthly. On the monthly time frame, nothing. Here, nothing. Only two of them, so there is nothing. Come back here. Here, nothing. Only two of them. It folded up, but two. We don't want that. What do we have here? We have something here. What you're gonna do here? You're gonna connect everything just like this one, right? You're gonna connect this thing. This is a long wick. I told you to never connect the long wick. Not like this. Don't do it. Don't do it. Just like this one. Put it down here. Okay? Put it down here. And then what happened next is this thing broke, right? This thing after the third candles have been formed, this thing broke. You sell. Boom. To the downside, 50% out right there. And then what happened? Then you leave the other 50% run. The same thing, okay? It's the same thing. And then what you're gonna do is you're gonna let the other 50% run and then trail your stop. After this thing moved down here, what you're gonna do, you trail your stop halfway right there. So this thing moved further right there, as you can see. Then you trail down there, and this thing came back and got you out of the trail. So you don't care. Here on only two, we don't want that. Here, 1, 2, 3 right there. Three of them. You connect this thing like this. They are equal here, so you connect it like this. So you can see this thing broke, sell, boom. Then do what I have told you previously. What do we have here? Another candle, boom. You connect like this, but this is not equal, so you connect it like this, right? So connect it like this. Then boom, TP hit right there, 50% run, stop loss put right there, but this thing could get you out of the trade because this thing came back and supported this thing. Okay, you can enter a trade again if this thing rejects. When this thing rejects up, you can enter a trade. Okay, up because of the second model. There is a second model, right? So that is a beautiful trade riser. 50% out, you are already in profit, and you trailed your stop up to your entries, and this thing came back and got you out of the trade. Only two, we don't want that. 1, 2, 3, then 4. Beautiful. In this case, what you're gonna do, you connect like this. Connect it like this, okay? Connect it like this. What happened here? 3, and this candle, what did it do? It bursted up, right? It went up, you buy. You buy. You don't touch nothing, your stop loss down here below the box, right? This thing came down a lot, close to your stop loss, but never hit. Your stop loss was never hit, so what you're gonna do, leave it as that. Don't touch anything, don't touch anything. This trend will be over once this thing breaks down, not right there. When it is inside the box, it is inside the box. This breakout is real, right? This is a break and retest right there, as you can see. Broke, retested right there, boom, and broke, retested again right there. So beautiful right there. You can buy right there if you are out down here, but as you buy this one, don't touch until your stop loss is hit. Don't touch that thing. As you can see here, what happened? It broke, supported, boom, TP hit right there. After TP hit, this thing consolidated. Okay, that's why I tell you to get out when TP is hit. When you measure this thing, this is a TP right there. As you can see, TP right there hit, boom, right there. So you get out right 50%, let the other run, and this thing got you out of the trade, came back. So this thing will get you out of the trade. It's okay, you are in profit. So what happened next? Next we got 1, 2, 3 right there. So what you're gonna do is you connect this thing like this, downside too. And what happened? This thing broke. This thing broke, you buy. You buy this thing, And what happened here is the third model right there. It is a single fake out. It doesn't matter if you connect this thing up, it is still broke to the upside, right? So this thing could potentially hit your stop loss because this thing didn't move up. You didn't trail your stop up there because this thing didn't move up. If this thing didn't move up, then how do you trail your stop? If this thing were trading above here, your stop would be above here. So in this case, one loss, we have lost one trade right there because we were in profit, but this thing came back and ended up being the third model. The third model. Then just this loss would be covered by this right there. It is beautiful trade right there. That loss would be covered by this stop loss hit right there, and then you would enter a sale right there. Boom. So the whole trade that I showed you in this case, as you can see, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. All of them around 14. From 14 trades, we only lost one. We only lost one, and we got the losing trade into profitable trade by using our black box, right? And it is beautiful. It is beautiful as you can see it. So what happened here? It broke the downside. This even can tell you that this thing has a win rate of uh, a win rate of 98, 96%. It's crazy. It is crazy, 96%. That is even if you didn't enter the sale and your stop loss is it and you leave this trade alone and you didn't enter the sale. That thing has 96% win rate. It is crazy. It's crazy, bro. It's crazy. So as you can see, this thing melted more than your TP 50% run. Boom. Trail your stop. Boom. Trail your stop. Boom. It moved. Trail your stop. Boom. Trail your stop. Boom. And trail your stop. Boom. And this thing will get you out of the trade right here. Right here because you trailed it too close. So you would be out right here. So beautiful. It is beautiful. It's beautiful. As you can see, what about it? 1, 2, 3, 4, right? I mean 1, 2, 3, right? If you had got this trade when it was, I told you when the wicks are short, you can connect the wicks are short and they are equal, you can connect them. If they are wicks are long and if they are like this one, don't touch it. Don't touch this thing right there. So as you can see what happened, this thing broke to the upside. You buy, your TP will be hit right there, 50% out. Your stop loss above your entry. And what you're gonna do is you leave that trade alone. Don't touch it. And when you check if that thing moved up, you trade your stop up. If that thing moved down, the stop loss will take care of it. You don't have to worry about anything. Nothing. Don't worry about anything. So you are in profit, you are out of the trade by this candle. This candle made the weekend got you out of the trade. So what happened next? You don't care. You don't care. Then this thing moved up, no one cares. This thing moved up, no one cares. And then now is your opportunity to enter a sell either because of the third model. Because of the third model right there. That is a single fake out. Okay. That's a single fake to the upside. It faked us to the upside. So you can enter a sell right there. If you don't believe me, you can check, bring that thing up. Okay. As you can see, that is a single fake out right there. That's a single fake out. Okay, bring it down here. Then you sell right there, boom. Okay, and then TP was not hit. So this thing moved a lot. So you trail your stop where to above your below your entry, right? You put your stop where below your entry. So what happened right there? This thing uh, retraced back and got you out of the trade. So got you out of the trade. What do we have here? We have three candles. Why? you connect like this. Okay, we have three candles. Why? Because this thing traded down. Let me zoom in. Let me zoom in, and it is so beautiful. It is so beautiful. As you can see, this wick traded down below the 50%, halfway of this candle, this box. So that's what we want. So this is valid. And I told you that wicks are gonna be filled. That what you are seeing here is the same thing. Wicks are gonna be filled. What you are seeing here is the same thing. Wicks are gonna be filled. This thing came up and filled it. This thing came up, filled this thing. This thing came up, filled this thing, right? So that is what another secret right there to write it on your notebook. Okay, write it on your notebook. Do not just stare at me and believe that believe that it is gonna sink into your mind. Don't do it. Write it in your notebook. Write what I am saying. Okay, some key parts, some key pointers, and some words that you don't know. Then next, you will know what's gonna happen. Okay, I mean you will know what to do. As you can see, you would buy this thing. TP hit right there, boom, 50% run above your entry stop loss, then boom, smash the upside. You trail your stop upside. Then this thing moved a lot too. I mean, this thing came back, then moved a lot up. So you trail up there, then this thing came back and got you out of the trade. Right? So what do we have here? We have a consolidation. But this thing is moving up, so but we can connect it like this, right? So as you can see, this thing can be connected like this one. So we got one, two, three, right? Four. The fourth one broke, you enter a buy. You buy it. But if you wanted to combine trend lines with the black box, you can do that. Okay, just like that one. This is a trend that the market has done. On the first months before I discovered this black box, I was using these trend lines like this. Okay, I was using them just like this one, and I was trading using them. Okay, as you can see, you can use this thing and move your stop, I mean your black box up there. Because why? This thing comes back and trade it down, and when this thing is very narrow, it will break out. So as you can see, that is what it did. As you can see, it brings this down here, right? It brings this here. Combining trend lines is very great. It is very great. Just like what you are seeing here. If you see a clear trend to the downside or to the upside, what you're gonna do is you're gonna combine. You're gonna use your trend line. As you can see here, you can use your trend line. The same thing. It's the same thing. Nothing. So your box will be down here, not up there. It is down here, right? Oh, beautiful. That would be a beautiful additional confirmation. Additional thing to do. So as you can see, this thing, if you combine it, this one just like this one, so you would what? You would be careful. You would be careful of what? Of the fake outs. As you can see, if we had combined this thing like this one, we would have bought this thing. Without our knowledge, we would have bought this thing, but our TP is it actually, right? 50% out right there, and let the other 50% run, right? That's what we would be doing. But in this case, when we use our trend line, please write it on your notebook, right? So you don't want to forget this thing. This is key. This is very key. As you can see, this thing has stopped our the fake out too. The fake out, even the fake outs. As you can see, you can combine. You can do like this. You can bring it down here, right? Covering everything. Now this thing would come here. The fake out could come down here too, down there too. So this box has covered everything right now. After that, this thing broke, you sell. You sell, TP never hit, don't touch it. TP never hit, you don't touch nothing. Your stop loss up there, don't touch it. This thing came back close to your stop loss. So some beginner traders are like, they are shaking. What am I gonna do now? My money is gone. What am I gonna do now? Before my stop loss is hit, I gotta get out, man. I gotta get out. I could save some money. No, no. You won't save some money. This is the second model riser. Break and retest, bro. What the hell is going on here? So as you can see, this thing broke and retested. The market always does this. There is nothing new. That's why we place our stops at strategic place, not on some random place like this one, like here. No, if you put it down here and you expect the market to run down, your risk to reward is hard. Your risk to reward cannot even be 1-to-1. It's crazy. We don't trade 1-to-1 risks. It's crazy, right? 1-to-1 is uh like it won't work. It won't work, right? For the long run, it won't work. So as you can see, this is the key. This is the key right here. The trend line is the key. If the trend line were not here, then we would be uh, what we would be doing something like this and something like this, right? Every fake out would get us out. As you can see, our stop loss would be above here, and this thing came back and got us out of the trade. So this thing, trend line, is very useful. When you see a clear trend, not every time, do not do it every time. As you can see here, there is no trend, right? So how do you connect this thing? Down? No, you don't connect this to the downside. How do you connect this? Up? No. What is the point of connecting to the upside? It's crazy. So when you see these kinds of clear trends, you can connect with a trend line. When you do not know how to draw your box, okay, your ability to draw the black box has a very significant uh, uh, it has a very huge significance, right? So when you draw it correctly, you would get, as I have told you, 90%, 95%, as I have showed you right here. We are getting a lot of profits, as you can see it here. So what happened here? You sold it, TP hit riser, 50% run, boom, right? You are trailing your stop after your TP is hit, your first TP. What is your first TP? Your first TP is this boxes head, right? Nothing new. And nothing new, there is nothing new. As you can see, that market has already finished retesting and it moved that up there, right? So we are not worrying any break and retest again, right? Because this thing will never come back because it already retested that. So that thing kicked that, I mean hit that our TP, our take profit, the first TP. As I have told you, the first TP and the third TP are very important. They are very important. As you can see, this thing hits that thing, you get out 50%, leave the other 50% run, you trail your stop from up there to down below your entry. In case of news or something, if that thing comes back, you are safe. So that is beautiful right there. We got 1, 2, 3, 4 right there. So you connect it like this. Okay, you connect it like this. So you can see we got 1, 2 close, and the candles are making a lot of consolidation around here. So this is your box, lower band. This will be your box right here. A lot of consolidation box around here, but this thing was not. They are ragged, so the average is around here, around the body. The body will be the point right here. So what happened next? If you had spotted this thing after the three candles are formed and you would enter a buy right here, right? Then this thing came back and moved up again. That is what happened on Bitcoin recently. So I already told you about that. So you can watch about Bitcoin on my channel, on my YouTube channel. Everything is there from the monthly to the 4 hour. I have put a video on that, so you can see that. And as you can see, this thing could have went up and TP right there hit. Now it is time to trail your stop up. After TP is hit, write it in your notebook. You trail your stop up after your TP1 is hit, the height of the box. Right? Where is your TP? TP1 right there. Put it up there. Your TP1 right there. Boom. Look what the market did. After hitting TP1, it came down. That's why we are getting at the possible maximum profit we would get. Not everyone can get 100% profit, right? So we are close to 90% or something, as you can see. Beautiful, beautiful. Sometimes it is 98, 99%. It's crazy. At the point, we get out at the point of reversal. It's crazy. As you can see, let the other 50% run halfway, stop loss halfway, boom, moved further. Stop loss halfway, it moved further. Stop loss halfway, then this thing moved further again. Stop loss halfway. Then this thing came back and got you out of the trade. You don't care. You are in profit. Beautiful. This I don't 1000 pips. It's huge. It is huge. As you can see, 1, 2, on only 2 candles. We don't want that. But if this thing I think has traded to the halfway of this candles, as you can see, traded up and down, not just melted down. It didn't just melted down, it traded up, so we can consider this as 3 candles, right? You could sell that thing. TP hit. When TP is hit, you trail your stop up there. We didn't connect this thing up there because there is no trend, there is no point connecting up there. And if the market goes up to fill this candle, then we would enter a buy, and this buy would be great. It would be very great. We would be in profit. As you can see, this is a trend, right? There is a clear trend right here. This is a trend, so your box would be down here, right? So this candle, this trend line would get above here, right? Above there. So that's why. Right there is where the fake out ends. So this thing broke everything, the trend line, the box, so you didn't right there, boom, TP hit, your stop loss above your entry, below your entry, and this thing came back, got you out. What you gonna do now? You buy again. You buy. You buy again, and what you're gonna do is, as you can see, this thing retraced back, right? This thing retraced back and moved up again. So what you're gonna do is, in this case, I think the stop loss has been hit because this abnormal candle came back. This thing doesn't happen a lot, but this abnormal candle came back. Alright, maybe this thing could be around here, right? Maybe that could be the place where it has to be. As you can see, they are equal right here. It's crazy. It's crazy. Maybe we should put our stops, our box where this thing has ended. This trend line has ended. It is right. So as you can see, but that is not great. We do is like this, okay? We do it like this, and this thing after breaking this, it came back. So we are out of the trade. We are entering it after this thing moves up again, right? So until then, there is no trade. There is no trade. There will be no trade because our black box is never satisfied. It is not anything like the force models. There is nothing in here. Okay, there is nothing in here. So it's crazy. This thing came back, but if your stop loss were down here, but this thing could have played out. But if your stop loss was down here, then this thing will get you out of the trade. So it is better to put your stop loss when the third model happens. put your stop loss below the bodies of the first breakout, okay, on the single fake out right here. So just like this one, right, just like this one. Put your stop loss where? Up there, right there. I mean, because this thing could come up and get down again, right? Because this consolidation could potential continue. I mean, this could be the consolidation right here, okay, as you can see it, as you can see it. So just place your stop loss down here, and if the third model happens, okay, if the single fake out happens, just place the the stop loss down here, and you will be safe. You will be very, very safe. As you can see, this thing went to your direction after supporting something. So nothing more. There is nothing more. Beautiful riser. So you are in profit already in here. So your stop loss being here is not wrong, because this thing broke. We got the signal right here, so we are buying. What do we have here? The trend line showing us that we should place our stop up there. I mean our box up there. As you can see, this thing broke, sell, boom, and then sell, trade your stop, then boom, right there. Beautiful, right? Another great trade. You put it down up there. As you can see, another consolidation. I'm sorry. As you can see here. Now, when you connect this thing with a trend line, as you can see, look what happened. It's crazy. Look what happened. So this thing is, the trend line is telling us that this thing should be around here. But look at that, it faked us right there before going down. It faked us. So what we're gonna do is we're gonna cover everything. We are gonna cover everything at least to the second candle, right? Just like I did here, right? The second candle from the last candle, the second candle connect everything right here. So the fake out would be prevented. Okay, the fake out would be prevented, as you can see. And then this thing, what it did was it broke. It broke. So down you sell, then TP it riser, then beautiful. Then three candles riser. As always, connect the second candle. Right there, the trend is up. So connect the right here, not no trend. So you connect the wicks, right there, up there. Connect up. You enter a buy once this thing breaks. And it came up, then broke. It supported, then broke. Then this thing never hit your TP. Then it supported again, and then came back to your TP right there. Your TP is around there. A lot of harsh trades, I mean harsh price action, but it went to your TP, so you don't care. You don't even care, okay? So you place down there. So your TP is around here by this candle. Third candle. So the third candle would get you out of the trade, 50% out. Stop loss below your entry. Then this thing came back and got you out of the trade. 1, 2, 3. Right? So bear with me. We are finishing up. So we are finishing up. So what happened? The third candle, the fourth broke. So TP hit, boom. Stop loss where? Right there below your entry, and this thing came first traded down, then came up. So it is crazy. It's crazy. Then we got another consolidation. Why this thing closed in the consolidation inside this? Not here, not there. It closed right there. That is a freaking dodgy. So what you gonna do? Connect everything. So the second candle, because as you can see this thing, when you see the trend, this thing there is some trend right there, uptrend. So you connect the second candle. I told you we have learned our lesson in here by this fake out right there. So right there, put it on the second candle. When the market comes back, we don't even care. In this case, it is the same up there. You buy right there, boom, boom, TP hit right there. Stop loss above here, then boom, smashed, stop loss above here. This thing, boom, stop loss above here, supported and boom, moved up. Stop loss above here, finally came back, right? Finally came back. So what do we have? It is trending. We don't have nothing. Okay, we don't have nothing. Then what happened? This thing came up. Now we have a consolidation. Now we have a consolidation right there. So what happened here is this thing moved up and hit your TP right there. We can measure the right here. We can measure the TP. Place it up there as you can see. This candle, even this candle filled it 50%, halfway your stop loss, then this thing came back and got you out of the trade. Two candles, no trade. Two candles, no trade. We got three candles, right? Why? This thing traded up instead of going down. So that is a freaking consolidation right there. You connect like this. You connect like this. Why? This thing is long and this trend is the downside, as you can see when you connect the trend line. If it was upside, then we would connect it. If it was like this, then it was great. We would connect the downside, but this thing was like what? Like this, right? Like this, as you can see it. So we don't connect it. We don't touch it. If you are more conservative, just connect this thing. That's all. Okay, so you don't worry anything. Don't worry about anything. You just connect it. As you can see, sold, TP, boom, hit right there, boom, TP hit, and then your stop loss above your entry. This thing came up, right? Then moved more further. Stop loss right there. This thing consolidated again, moved further. Stop loss, moved further. Stop loss, moved further. Stop loss. Then this thing came back and got you out of the trade. So beautiful trade. As you can see, this is where we are right now, right? So what did we had right here? We had a consolidation. Beautiful. Connect like this. So what happened here is it is crazy what it did right here. What happened here? It hit our TP. Isn't this beautiful? Isn't this beautiful? It's crazy, bro. It's crazy, bro. Look at this. Right here it didn't, but after supporting right here, it went deliberately to our tip. It's crazy. After that it retraced, right? So it's crazy. So you'd get out right there when your TP, when your stop loss is hit. It's just amazing. Then what happened here? Nothing. No consolidation. It's trending right there. It's moving. It's moving down, up and down. No, nothing here too. No consolidation. But if you go to on the 3 months time frame, you would see there is a consolidation. So as you can see, beautiful trades, a lot of tips that I have told you to minimize your risks of being stopped or being lose. As you can see the above here, you could have connected like that one if you want. If you had caught that thing after these 4 candles have been formed, right? So as you can see, this was a great riser. We had on the monthly time from 2003 to 2024, that is 20, how much? 21 years of trading riser. What you are seeing here is a 21 year of trading, and we got riser 4, then 4, that is 8, 9, then 3, that is 12, then 2, that is 14, then we got 4, that is 18, we got 4, that is 22, we got 3, that is 25, and we got 2, that's 27 setups by using the black box, and it was beautiful. It was beautiful. The only thing that failed us was right there that failed us. It hit our stop loss, and using the third model we entered a sale right there. It's beautiful. So that's it. So thank you for watching. Thank you for being with me. I hope that you have learned something, and I will catch you in the next one. Next, we will be looking at euro dollar on the daily time frame. Okay, on the daily time frame. We'll work our way down, right? So I will see you in the next one. Thank you for watching. Bye bye. I love you guys.